Hi, this is Sue, and I just want to keep your attention focused on some of this activity out in the bigger picture of the market. And I want you to see this again, another perfect, and I mean beyond perfect, example of a bear trap. Here we go again. They're not even trying to hide these. You can call it a professional gap and go, a gap fill. What it is I get so excited because it just gets more and more obvious that there is a total shift here in how this market is going up in spite of anything right now. Nothing lasts forever, but they're not even hiding these anymore. In the old days, yes, I'm an old time trader, in the old days, they would try to conceal this kind of action. They jerk it up and down, up and down, up and down, and whatever. But this is almost beyond blatant, seriously. I mean, it is seriously almost beyond blatant. So here we come into the open. Now, I know I'm using a 5-minute, don't really want you to trade that, but I want you to see it. So we flush down, gap down overnight when the futures markets opened Sunday afternoon, evening. The big flush down from the oil meeting, probably some of it from Japan, the earthquakes in Central America and Japan, and down we go, and then first bounce, and then it retests right at the open, and look at your MACD. Just look at your MACD. Unbelievable. It is lift up, flush back down, third hit. This is the little one that suckers everybody in short because its initial reaction is to push down. And then you get the first cross of the 8 and the 21, then you get the pitchfork, and off it goes to the moon. To the moon. To the moon. It's like, it's not even to the races. It's to the moon. So let's see what Shadow Traders Quad is on. It is not on the picture I want. So we're going to put that behind. And let's pull this out. So let's look at what the ES minis looked like coming into the morning. And this is why, if you're going to trade the SPY, this is your best friend. There is the pitchfork forming, going down into the overnight. That was the gap down. Held. Look at it hold. Then if you look at this, and we will look at this for just a second, but it's a double bottom here with divergence on the MACD. Now watch what it does, folks. It pushes up pre-market. This is your opening, is where this gold bar is right here, this box. So pre-market, we run up, we hit his 200 moving average, we fall back down right into support. I couldn't make this up if I tried. I couldn't make it up if I tried. And look at them testing and teasing and taunting the bears. Come on in, come on in, come on in. Catching on this moving average, being supported by being hitting the resistance here. Push down, right at the line, testing below, teasing, inviting the bears to jump in. Bear trap, bear trap. So let me bring up another one. Let me bring up this one. This is the overall quad at the open. Here we were pushing down, pushing down. You see the sucker play? Open, down, into that support line. Look at the support here, 4 15-minute candles in a row, but below the zero line. Now watch what happened on the ticks. Opened down here and pushed right on up. Pushing up, pushing up, pushing up, pushing up, driving price. Little tiny hammer, hammer down. You can't really tell that's going to do that at the open, but this is the result. Caught right in that support range and straight up through the gray box, through the market value area, through the prior close, through the other side, and is now up at, this would be, oh my gosh, this would be resistance 1, 2, 3. And they don't put any more than 4 on. So that's it. I mean, if we come up here this afternoon, they'll have to rework this. I don't know that we will, but they'd have to rework their numbers to get the 5th resistance line. That's how strong these moves are. Out of nowhere. Out of nowhere. Now somebody can say, well, it's this or it's that. I'm just saying that this has been working since '09. They were hiding it in the old days, they were camouflaging it in the middle years, and now it has become blatant. Just it's blatant. So when you're trading, remember that this is what they call the plunge protection team. Market pushes down, overnight news, bad, 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 sell, sell, sell. But oh no, 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 no. There's something supporting this market out there. And if you don't believe that, at least for now, I don't want to make any long-term statements. If you don't believe that, all you have to do is look at this. And we'll just bring up the ES. All you have to do is look at this. Up, 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 pushing, 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 pushing. It consolidates, then lunges. That wasn't even really a consolidation, and then lunges. And a lot of this action, not all of it, but a significant amount of it is in that overnight. Okay? That's what's going on, folks. Massive, massive pressure. And if you were a MACD trader in the futures, there's your leg up. There is your leg up into the open. Nice, 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 nice. Nice pressure pushing up. That was your butterfly. That was your line in the sand. Bottoms down here where it has bottomed before and slingshot up out of there. All right? Sucker play for the bears all night long. Come on in, come on in, come on in. Well, early evening. And then right around midnight when London opened, boom, up. All right? So if you can start to, get a rhythm here, you'll have a leg up when this starts to subside. Okay? No end in sight at this point. The SPY still on the higher time frames on that daily and the weekly. The SPY is still rocketing up from this. Extension, extension, extension. No 50% retracements to speak of. Nothing. Doesn't even break the 21. Unheard of. I think this is the longest run we've had. So just so you know where we are, don't lose sight of it. And remember, the other side of this coin is when it goes straight up like this. Very often it can have a pretty decent pullback when it does let go. So just know where you are, protect yourselves. No need to panic, no need to be crazy or try to front run everything. Just know where you are, okay? And understand the power that's being brought to bear to do this, because it's on exceptionally low volume. It's on quite low volume. The volume keeps tapering down. If you look at this line here, you'll see that the volume keeps tapering down. So what is that telling you? This is not a lot of new money coming in. People aren't buying it. You know what I'm saying? They feel that something's wrong. Now that's why I said that's the point in time when we will break out to new highs. Because everybody's talking about how this can't be real, and I'm not predicting that, but I'm saying it's possible. Because the market's job is to make most of us wrong, as many of us at one time as it can. So the more people who jump onto the 2016 crash, it's death and doom, the more likely that is going to be held off. They try to get, public opinion wrong-sided. And it is, buy in May, sell in May and go away. It's around the corner, but it was not easy to trade that last year. It did not help us last year. It was very difficult to trade that. The market held up well into the mid-range end of May before it decided to have a pullback, and then it wasn't, that significant. So just be aware of where we are. Nothing to do but, take a deep breath and just, bear with it. Okay? Makes you a smarter trader to at least understand what's going on. And I give you this morning another perfect bear trap. Thanks for playing. Talk to you later. Bye.